Hi, thanks for tuning in to 10 Ways to Save Your Super. My name is Jolene Sukkarieh. I'm from My Financial Group Health. We specialise in the provision of financial services to health professionals. Tip number 1, find out how many super funds you have. 1 in every 3 Australians have more than 4 superannuation funds. This means that you will be paying more than one administrative fee or multiple fees on your accounts. If you leave your superannuation unattended for more than 12 months, the government can potentially roll your funds over or transfer them to AusFund or other associated funds. It is important that you review how many you have. You can then accurately assess your opportunities for your superannuation. Consider combining your superannuation funds to reduce fees. Some Australians believe that there are benefits in having multiple superannuation funds. Generally speaking, each fund is charging an administration fee of between $75 and up to $350 per annum as a flat fee. Therefore, if you have multiple funds, these fees will be multiplied. It is important to consider combining them. You could be saving yourself thousands of dollars a year. Ensure that your superannuation fund has your tax file number. Many occasions, tax file numbers are not provided accurately, and your superannuation fund could potentially be charging you at the top marginal rate, 46%, for your superannuation earnings. This can obviously detract from your earnings of your superannuation and over a period of time cause a massive decrease in your fund balance. You can notify your superannuation fund of your tax file number and claim back previous years of excess tax that has been charged. Check that your employer is making your compulsory superannuation guarantee contributions accurately. It is important that these contributions are being made accurately, as if you change employers or you leave that superannuation fund, if those contributions have not been received, it can be difficult to go back and try to have them paid to the fund. If you are a government employee and you work for Queensland Health, you do have the opportunity to increase your personal contributions pre-tax into your superannuation fund, which in that case would be Q-Super, and therefore the government will potentially increase their contributions also. At the moment, if you put in 5% of your own money pre-tax into super, your employer contributions will increase to 11%. So it can be beneficial to take advantage of some of the offers that your employers have for your superannuation benefits. Check your life insurance cover in your superannuation fund. If you have multiple funds, you may have multiple life insurance covers. If you are paying separate premiums for these covers, you could be paying higher than necessary. If you consolidate your funds and you check your insurance cover is adequate, then that will ensure that there is not unnecessary money coming out of your superannuation account. Work out how much you will need in retirement. It is important to assess your lifestyle and your expenditure requirements so that when you reach retirement, you have sufficient funds, both inside super and outside super, to meet your needs. Many Australians do not retire with sufficient funds to provide a comfortable lifestyle in retirement. It is important to assess your requirements both before and after retirement so you can ensure that you have enough in superannuation. Review your superannuation fund. There are many options in Australia. You can have industry funds, you can have retail funds, and you can have self-managed superannuation fund options. It is important to review your fund and ensure it is competitive in line with fees and returns and options that you're comfortable with and that give you transparency for where your money is invested. Monitor your superannuation fund returns. You can invest in multiple options inside superannuation. It is a tax environment, and many of the options that you have to invest individually, you also have available in superannuation. For example, if you prefer the option of cash and term deposits, these type of options are available in superannuation as well. If you prefer the nature of the share market and what that can offer long term, then these options are available inside superannuation. You can look at websites like Superguide, you can look at Superseeker to assess the returns of your super fund in line with other super funds. Review your investment options. Once you have decided what you are comfortable with, ensure that it is in line with your expectations of what return you are going to receive from your fund. At different stages of life, your investment options will be different. For example, if you are younger, then growth style assets such as property and shares will be more relevant than if you are reaching or approaching retirement, where you're going to be relying on the amount invested in your fund. You may prefer to have a more conservative option at that stage. It is important to continually monitor and update your investment options according to these requirements. Identify your nominated beneficiaries. Passing on your superannuation if you die is an important aspect to consider. Depending on who your beneficiary is, there may or may not be tax implications of passing on your superannuation. This is where you may need the assistance of a professional to guide you through the aspects to consider for your estate planning. So overall, it is very important to consider each of these aspects for your superannuation. Unfortunately, superannuation is one of those areas that is commonly neglected, and we do not investigate until it is too late. So the earlier that you look at these aspects, then the better that your superannuation fund will do in the longer term. If you require further assistance, we are of course available through Health Industries. Feel free to contact us at any time for further details.